I've been a professional economist for nearly a quarter century. In that time, I can't remember a period as confusing as the one as we're in today. Financial turmoil is unprecedented, both in terms of its depth and severity and breadth and length. It's now going on for more than a year. It's a very confusing time, even for me as an economist, and I wrote this book in an effort to try to explain how we got here, why we're here, and what it all means for us going forward. This is a shock in that it seemingly came out of nowhere, something that was a surprise to most economists, certainly to nearly all policymakers and investors. And it's unique in that it is as severe as it is, almost $1 trillion in losses to global investors. To give context, the savings and loan crisis cost investors about a fourth of that. It's also unique in terms of its breadth. It's touched every corner of the financial system, from U.S. stocks, Chinese stocks, to emerging market debt, to, of course, residential mortgage debt and securities. And the length, it's something we've never seen. Most financial crises last a few days, maybe a few weeks, a couple months. But this is now going on over a year, and there's no sign that it's abating anytime soon. The causes of financial shock are several-fold. Most fundamentally, it's hubris, the idea that house prices would never decline. They never had historically, and borrowers, lenders, investors thought that they never would. Perhaps they would go flat for a period, but never decline to the degree that we've experienced in this current housing crisis. And those price declines, of course, have created the turmoil that we're seeing. It's also as a result of fundamental flaws in the way in which mortgage loans were financed, the process of securitization. In that process, no one really had responsibility for making sure that the loans that were actually being made were good loans. The process was flawed, and of course, a lot of bad loans were made as a result. And moreover, it was due to a lack of regulatory oversight. This was the apex of a long period of deregulation. The thinking was that markets could solve problems entirely on their own and wouldn't get into big problems like the ones we're suffering through. So there was no significant regulatory oversight, and obviously that was a mistake. The effects of the financial shock are very serious. Obviously, for investors, this is a huge hit. It ultimately cost them about $1 trillion, which is a pretty significant piece of change. Of course, it means lost wealth for all U.S. homeowners. We've already seen approximately $4 trillion in housing wealth get wiped out. And it also means a recessionary economy. At the core of the current recession is the collapse of the housing market and falling housing values. It's undermined construction and consumer spending because people don't have the cash and the wealth that they had previously. And now it's also weighing on government. State and local governments are struggling, property tax revenues are falling, and that's also hitting the economy. So the effects of this financial shock are wide-ranging. I should also point out the effects aren't only here in the United States, they are global. Our problems are now almost everyone's problems. The European economy, the Canadian, Japanese economies are, if not in recession, very close, and that's the result of this financial shock. The policy response to the financial shock at first was confused and slow, and in part contributed to the severity of the shock that we're experiencing right now. I don't think policymakers realized the severity of what we were going through. In fact, some thought this was a therapeutic process, that markets had got overextended, overvalued, and that it required a bit of comeuppance. But of course, we've gone well beyond that. The policy response has geared up in 2008. The Federal Reserve has been incredibly aggressive in lowering rates and trying to provide new credit facilities to provide new cash to the financial system with some success. And of course, they've been very active in resolving some of the more significant financial failures, Bear Stearns being the most obvious. The Treasury Department and administration and Congress have also become more active, recently passing legislation to try to shore up Fannie Mae and Freddie Mac, to provide help for mortgage write-downs to try to keep people from losing their homes if possible, and providing other sources of support to the housing market. I do think we'll see, and we'll need to see, more of a policy response going forward as the crisis continues to unfold and the economy remains weak. What we learned from the financial shock is that markets, while they are the source of our wealth, also at times don't work well. It requires prudent and vigilant regulatory oversight. And our regulatory framework is not of this day. It was put together back in the Great Depression, and it really does feel like it has to change. And one of the key lessons from this shock is that we need to rethink the regulatory framework over which the entire financial system is overseen. Isn't the last shock we're going to struggle with. In fact, it feels like every 10 years we get into a similar kind of mess. I think that's because that's the length of our collective memory. We are chastened by these kinds of financial events. It takes about 10 years to forget them. Moreover, it takes about 10 years for boardrooms to switch over and a new generation to come in, and they'll think, like the one before them, that this time is different, that they know better, and in fact make the same mistakes that the previous generation made, and we'll have another shock. So I don't think we're going to be immune to shocks going forward. In fact, I do think we need to prepare for the next one, and that probably will center around our fiscal problems. The math, the arithmetic is very daunting given the increases in spending that will occur on Social Security and Medicare and Medicaid. We will have very large budget deficits in the future, and that will be our next big financial test.